Hi everyone, and welcome to EarthRenew's live investor webinar. EarthRenew is publicly listed on the Canadian Stock Exchange under symbol ERTH and on the OTCQB under symbol VVIVF. Joining us today is the company's CEO, Keith Driver, who will be going through Earth's May investor presentation, including an update on the company's current operations, upcoming milestones, and share some insights on the Replenish acquisition. At the end of the presentation, we will open it up for questions for Keith to address. If you are interested in asking a question and are logged into the app or web platform, you can submit your questions to us directly in the questions module. Please note, this presentation is being recorded today, Thursday, May 13th, and will soon be made available on the company's website. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. EarthRenew's full disclaimers is available on slide 2 of the presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. It is now our pleasure to introduce to you Keith Driver of EarthRenew. Keith.
Hi, thanks Paul for that. I'll jump right into the presentation. I look forward to the questions. I'll take sort of 15 to 20 minutes to go through the business, and then we'll leave the rest of the time open for the discussion. So looking at EarthRenew, we've just come through this acquisition. We now have the wholly owned subsidiary of Replenish Nutrients. Let me step back and explain a little bit about the organization. So EarthRenew is a parent company. Our skills are in and experience and patents are around waste upcycling. So we take manures and other organics, upcycle them into organic fertilizers and fertilizer ingredients. The intent was then to blend and granulate those and then push them through a marketing and distribution funnel. When we started talking to Replenish, the idea was we needed to have a partner. And as we started talking about partnering around marketing and distribution of our products and blending and formulation, it was quickly apparent that there was a deeper opportunity here. They were looking to extend back into blending and granulation, and there was going to be overlap there, and it made sense to put that together. As a combined entity right now, we're about 40,000 tons a year of product, a little bit below that right at the present. We're hoping to get there by June. We'll be trending that way. And we're looking to head from 40,000 tons to 400,000 tons. And what that's going to mean is we need to expand our production capacity. So I'm going to talk a little bit about that as we talk about the next steps as we go along. So together as a combined entity, we are that leading platform for regenerative agriculture. We can manufacture, blend, market, distribute those products. While all our products are organically listed, we sell them to both organic and conventional farmers, and in particular, conventional farmers who identify as undertaking regenerative practices where they're regenerating and rebuilding the soil that they're growing from. Looking at the value chain where we play, we start with low value ingredients, waste products, primarily waste heat, biosolids, organics, manures. We convert those into what look and feel and act like conventional fertilizer ingredients. The same chemistry, same. Otherwise, we've added a level of biological activity, and we've added a lot of organic matter. And we put those into what we call soil solutions. This is a list of some. There's a new one that just came out from us that includes boron. So we're continually blending them into solutions so that the farmer can take that and apply it directly and not have to do a bunch of work for themselves. We target the regenerative and the organic fertilizer market. Why that sets us apart is that our credentials come from the organic side. So we're coming at this from a holistic view. The concept of regenerative farming, which is feed the soil to feed the plant, versus conventional farming, which is feed the plant directly, so sprays, pays, lotions, and potions. So the idea here is we approach that from the holistic view. With EarthRenew Replenish together, we're coming at it from a position of strength, whereas our competitors, the large multinationals and regional players, are moving from conventional and trying to find regenerative solutions. So we believe we have an advantage, and it gives us a spot to both compete with and collaborate with these large players. More about that to come. The big push for organic and regenerative farming is being pulled from industry. So folks like Cargill and General Mills is listed here, and PepsiCo most recently have made big bets on sourcing their product from regenerative farming or organic sources. And that's important to us because farming is at its base mining of the soil for nutrients, and at some point you got to put back into that soil. And so leading farmers are already working on those practices, and we're there providing the products that look and act like conventional products, but have the added benefit of being suitable and appropriate for organic and regenerative agriculture practices. The challenge we face is that regenerative agriculture is a philosophy, not necessarily a regulated program. It involves any number of aspects that seek to rebuild the soil. So for that, we use organic fertilizer market, which is regulated and registered, and you can get good data for, to help us understand it. And as you can see, looking at this map of the US, you can see where the levels of activity are. And specifically the graph on the your right that shows the organic sales, you can see that the bulk of the product is heading towards California. So when you see in our development plan that we're essentially beating a path down from where we are here in Western Canada, beating our path through the Midwest and down into Southern California, you understand why. We're heading towards we're going to grow towards the light, towards the big market player there. What's missing in this graph is how regenerative farming is helping to fill in those gaps, fill in those areas where traditionally it would be large-scale conventional farming, and now they're able to move to conventional regenerative farming, i.e. they use conventional equipment and they use leading-edge regenerative products and philosophies in terms of how they farm, and that's where we fit. That's where the big opportunity is for us. That's why we're sold out of product at the present moment. So our soil health solutions cover a range, but it's essentially, at its fundamental best, it's a bunch of conventional looking ingredients sourced from unconventional means, upcycled in a way that is energy efficient through the use of our waste heat technology, and then we blend those and push them into the market and see where the farmers pull. Obviously, each product may have a better fit depending on soil condition, the type of crop that's being grown, where in the cycle, as they cycle crops through the fields, where they are, and what that nutrient need is for the farm. Our goal is to provide a small range of products that service the vast majority of the market, and then work to grow those product families over time. So our growth will come by geography, it'll come by new products, and it'll become by new products, I mean new blends of those products, and then new products, more product, i.e. we grow organically, pardon the pun, within those areas and the markets that we serve. The underlying technology platform, on the left, we have the thermal processing. That's where we are able to use the waste heat from our power generation as a free source, nominally, of heat to run the facility. It makes us incredibly GHG efficient from a climate change perspective. It makes us very cost efficient because we recover the value of the natural gas we need to burn for heat, and we recover that by the electricity that we sell. And in fact, in Alberta, right at this hour, we're making about $2,000 an hour just based on being on the grid right now at the time when the power price is peaking. The next step for us is upgrading, where we're looking to take undervalued items, low value organic components in their current form, dry them, upgrade them. With the CCM technology, we've been able to drive nitrogen from very low, kind of nominal in the product, so 2% of the product is nitrogen, as high as 11%. This opens up new markets. Our products historically have been nitrogen deficient because there's cheaper, easier ways for farmers to apply nitrogen. But with the CCM technology, we're going to be able to provide even better, more full range solutions. Then you get to blending and granulation. This is very old technology where you take a bunch of ingredients, you push them all down into a powder, you mix them, blend them, put them back together in a granule that will run through conventional farming equipment. This is incredibly important. Farmers have very little time to get the crop in the spring and get it off in the fall, and put the and in that time they have to condition the soil, put the things in the soil, the nutrients down they want at the beginning and the end of the crop, and have enough time to do all the other things, put the seed in and get ready and harvest. So there's very little time. And so having that product in a form where they can get it on site, store it as a granule, put it through conventional equipment means less time for them mixing stuff right when things are where farmers don't have time, more time in the day. Having lived on a farm in Iowa, I can tell you spring and fall, there's just no time in the day, and that has a new definition. We have two current facilities, the facility in Strathmore, where we have our power generation, and where the historic manure drying facilities are, and then the Replenish facility, which was in Bicycle, Alberta, and that's where they were doing the granulation. These sites are about 30 minutes apart, less as the crow flies, and from here, and with some other partners that we have where we're able to do blending off-site, we're able to service Alberta, Saskatchewan, Manitoba, North Dakota, and Montana efficiently. We're looking to grow that, and we're seeing our product being pulled in new places, but the best way for us to grow, because our product is a product that needs to be shipped, is to build and distribute our production across the territories that are looking for. I.e. these sites, this is where our 40,000 tons come from, and here's where we're heading to 400,000 tons. So we got plans for another facility in a place called the Bolt, Alberta. That's in the northwest, a pocket of high intense ag, very progressive, and with a focus on organic. The next facility you'll hear us talking about over the next month or so as we look at milestones will be our expansion in Regina. We have some low-hanging fruit there for a 100,000 ton facility that would allow us to be on operations ideally by the end of next year and produce for fall and spring of 2023. That's some great partnerships coming together to make that product work, and it's right in the heart of our current customer base and will allow us to expand the volume as we go. Next up, you'll have seen the announcements about the project in Colorado. That's the next. It's a twin of the facility that we're looking to build in Saskatchewan. Same flow, same equipment, same products, but just simply moving into that new geography. It's going to take us a little bit longer because we're going to want to seed that market with product from from our Canadian operations so that we can have that market available and build those partnerships on the distribution side that are going to be so important. So you're going to see announcements from us around both feedstock for these projects and offtake agreements. Our view is we're not going to be selling to the farm. We're going to be selling through retailers to the farm because that's the way the industry is organized. That's where these farmers are going to get good advice and make good decisions about what products they need for their facility. We've then got, or for their farm. We've then got a few other projects that will roll out over time to get us to that ever critical 400,000 tons. That is our target. When we look at the financials, on the left is the Replenish forecast. The agreement, the deal was officially closed last night or yesterday. And so we've got their targets on their financial year end, which takes us through until June 30th. They're trending towards about 10.3. There's some other options we're trying to get in here before the end of the year to bump that number up. But critically, we're going to get to that 8-figure revenue. That's important for us. If we extend that on a linear basis to where we'd be at 400,000 tons of production, you can see the annual top line revenue. Now, it was pointed out to me yesterday that Agrium and these folks, the large producers that don't have high growth rates, I mean, our CAGR over the last 3 years has been 200 and something% with as a combined entity. So take that out and just look at one of the sort of larger, more established players not going. They're trading at about 1.5 times revenue. And I encourage you to do your own research on that as well. And what we're looking at is saying, okay, great. We're trading at about that, but we're not accounting for any of the growth opportunity that's sitting in front of us. So we're trading as if we're a stale operation in a business that's increasing maybe 6 to 8% per year, and we're in a business that's growing at over 200% a year and has been growing at over 200% a year. So we think there's some communication we need to do around that. When we get up to 400,000 tons, that gets us into 9-figure revenue with very healthy margins, which are typical in this space by the time you given our pricing methodology is very similar to the conventional guys where we price off the nutrient value. So lots of opportunity and runway for us. If we bring that EarthRenew facility in behind that, the products that EarthRenew produces are an ingredient that Replenish would otherwise have to go source somewhere else. So there's some cumulative effect there, and there's also the whole new product line of just EarthRenew related items as well. So we're looking to see these as additive, and as we progress here and as we start making announcements about our Saskatchewan project, we'll put together a combined forecast. At this point, we're a bit at that hockey stick moment where we want to make sure we calibrate that curve and make sure we're going to deliver on that as we go. But it's pretty easy to see where we are and where we're going to be and where that would equate to value if we use even standard metrics in the space. Management team is myself and Kerry and Ryan, who were the original EarthRenew management team, and we've happy to announce Neil coming over as CTO and head of sales. He'll also be president of the Replenish business unit. And then Gerard and Kevin Erickson, Kevin actually was originally with the EarthRenew team back 10 years ago when it was originally founded as a business. And now he's back in the fold, and Gerard and I have had the pleasure of working together in a couple of different industries over time. And so we've got that team together now, a sort of fantastic business development team, and with depth to be able to grow this business over the short haul. For the board, Neil joined the board, or will be joining the board officially in the next day or so. The approvals are all in place, and he'll join Catherine and Chris and myself. Chris brings the expertise around electricity, which is a bit of a sidebar to our business, but we felt we needed to have someone on board who could help us with that. Under his support, we've gone from $300,000 in sales last year to $500,000 in sales in the first quarter of this year. So he's certainly been able to help us navigate the opportunities that come. And Catherine has been a CFO in other organizations and brings a good deal of governance and expertise to that space. We are currently recruiting, looking at someone to help us, particularly as we look at our US expansion, just to make sure that we've got the right perspectives on the board. Post our AGM this year, we're looking to bump up to a 7-person board, just because I think we've got that level of activity that having that kind of oversight is going to be important to make sure we get the business going in the right direction. So with that, I'll say thank you very much for listening. I think I took about 20 minutes, as I said, to go through the business, and I'll leave it to Paul to guide me through the questions as they come in. Thank you.
Thank you, Keith. If you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the questions module. So we'll take a moment to develop the queue. Thank you. And Keith, while you were presenting, we were receiving a few questions, so I'm just going to jump right into it.
Please.
I think this is a question that you may have asked before, but it's important that perhaps some of the new investors here in EarthRenew know about this. Has the Strathmore plant been approved by the community?
So we're still in the process of that. In fact, today we were supposed to be at a hearing and it's been delayed for a month. We have 2 plans for that facility as we go forward. One, if we can work with the community to get their full support, which will allow us to do the full development right away. If not, we'll have to go through probably a 2-step process to manage that growth. Either way, we're looking at the expansion into Saskatchewan would probably come first in terms of that versus the redevelopment of the Strathmore facility. The economics on the Saskatchewan project are just so attractive, and it's an opportunity to do it in a community that's frankly looking to bring us in versus managing expectations in a market where there are some in the community who would prefer that there wasn't that kind of industry in their area.
And do you have any other update that you can share on the Strathmore facility, including commissioning?
We're still in a holding pattern. We got our approval with the provincial government, and we're working with the municipality on the the development, the construction, permitting side of it. So until we have those, there's really no update for us. We are shifting some of our attention towards that Saskatchewan project while we wait for matters to settle. COVID has done nobody any favors in terms of having these processes. It's very difficult to do stakeholder engagement when you can't actually be in the same room and really, break bread with folks and understand their concerns. And so we're going to shift our energy to places that drive for larger revenue. Putting it bluntly, the facility in Saskatchewan under those economics would add $30 million of top line revenue, whereas Strathmore would add 4 to 5. So we're putting a suitable priority on Saskatchewan versus Strathmore, even though Strathmore would be obviously low hanging fruit for us in terms of expanding that capacity quickly.
And is there, are you able to add any more color on the crypto mining partnership that you recently announced?
Absolutely. So we have this power that we produce when we run the turbine, and ideally that turbine is being run to produce waste heat for the operations. But there's also the opportunity to run it at its full efficiency, and that had us with a gap where we had some power we could put on the grid, and we went out there and looked for ways to maximize that value. And there were some cryptocurrency miners that were looking for power, and we were able to pull together an agreement that essentially has them paying a base price, which ensures that the costs of gas and all that is covered. And then there's some upside for us with, we get paid a rider based on the price of crypto. So we get some of the upside from the crypto price as it moves up and down over time. The advantage to that is by having a full load, we effectively become more efficient. So while it's going to allow us to go from, say, last year was $400,000 the revenue. So far we're about 550, 600 for the year. We'll probably get to 1.2 for the year just from electricity revenues at a 70% margin. I think we're 80% margin so far this year, but the summers are a bit flatter. So it's a great business for us to run because we have the asset. And with the crypto guys being there, we sell to them, we make consistent margin with them, and it allows us to run the facility more efficiently. So frankly, while the margin may not be as good on the power we sell them, we have the ability to turn them off and go to the grid for up to 10% of the time. And over the last 10 years, it shifts a little bit every year, but it's about 7% of the time the power price is a position where we want to turn them off. So the agreement works for both sides and allows us to operate our facility efficiently and maximize revenues.
So here we have the same question from two different attendees. And how are you planning to finance growth until 2024? And if you're able to give a percentage that breakdown of debt versus equity versus grants.
So obviously non-dilutive is our preference. And we think that we're in an excellent position to do that. And part of our business strategy is to lock in our feedstocks and not lock in the commodity risk. We're looking to pass the commodity risk through. So we'll secure a volume at a discount to market or at a peg to market for the nutrients, so that we can then pass that through, because we have the ability to change the price of our products as the price of all the nutrients moves. So we don't want to try and take a position. We're not hedging that because we're just not in a good position to do that. And then on the offtake, we're looking to lock in our sales by volume. So we're going to be effectively running the facilities like a tolling agreement where we can lock in a healthy margin. And that's going to allow us to look at the non-dilutive, so the debt and the equity, the debt and the grants. The grants because we're innovative and we're on our way, and the debt because we've got good line of sight to our revenues and a good book of business. I mean, $10 million plus is a good book of business for this stage of the business. There will be some equity component. To give folks a sense of, CapEx is about $150 per nameplate ton, but the margin is about $100 per nameplate ton of product that we produce. So you're looking at a year to year and a half payback on a simple view of the project. So the more we can lever that with the non-dilutive components, the quicker we can get that down. So these paybacks will be at or below a year in terms of efficiency of return on equity.
And while you were talking about the Saskatchewan plant before, received a follow-up question, and I'll ask one that we received prior to the webinar. First, when do you anticipate the Saskatchewan plant to be operational?
So we've got a few things to work through with the local municipality and other things, but wind at our backs, we expect to be operating in Q3 of next year. That won't preclude us from starting to sell into that market. That's a granulation facility, and we have the ability to sell blended product into that market right now. So we'll see some of that growth come earlier, but the bulk of it coming Q3, Q4 next year. And that's just right now. It's driven by the long lead items on the equipment that we're looking for, the granulation equipment. Yeah, there's just a backlog of that for that right now. So we expect that to happen there, but we do have to run the traps here with the various regulatory and commercial partners, and frankly, the social license with the local First Nations to make sure that we build strong relationships with them to support the project in Saskatchewan.
So just to be clear, if you can just go a little bit more color on the permit in Saskatchewan, and if you can use your waste to heat up the manure, or how would you use it?
Yeah, so the same opportunity applies for the waste heat, whether it's treating manure or drying other products that we might use. Being able to get a free source of heat and provide our own power at behind the fence prices is always advantageous. The approvals we need in Saskatchewan are different than those that we need in Alberta, in part because of the municipality that we're operating in and the distance from where we are to where there's residential properties is far different. So we don't anticipate the same concerns. And frankly, on the site that we're proposing at this point, we wouldn't actually be treating the manure, we'd just be drying. And that's a whole different, same sort of technology, but doesn't have any of the same concerns that have been expressed locally by folks in the Strathmore area.
In a previous presentation, there was mention of potential licensing into international markets. Can you comment on this and what plans might look like?
Yeah, we've had conversations on that front over the last few months, and it's progressing slowly. Our strategy is really focused: 40 to 400,000, beat a path to California. Make sure you get down there as soon and as quickly as you can. And so we have these opportunities in Europe. We're looking at them. I think at this point there is much of a distraction this year. And then next year, once we've got the facility in Saskatchewan up and running and we're looking to repeat it in Colorado, that'll be the point where all the work we would do to support a license agreement in Europe is work that we would have already have done. And so we'll be in rinse and repeat mode, which is where you want to be if you're doing licensing. What we don't want to get involved in is a lot of overseas one-of projects that effectively turn us from being a fertilizer company into being a glorified sort of consultant / support entity. We want to make sure we don't fall into that pitfall. So for us, leaving it maybe 6-8 months before we start getting serious to the point where we have standard approaches that easily extend into those markets, i.e. the technology, the equipment, the layouts, all that stuff is demonstrated with the same equipment at the same scale. Goes from there. My philosophy with this business is our facilities are going to look a lot like each other, kind of like how Subway has efficiencies by designing every store the same, and how Southwest Airlines has savings because every plane is the same. We're looking at that kind of a model for engineering where we don't have to redo it, and therefore it becomes highly attractive as a licensing option because it is so the technology risk is so low relative to the potential return.
And Keith, if I will be jumping around because as you're answering questions, we're getting follow-ups as well. So
Gotcha.
I'm going to go right back into the crypto mining. There was a follow-up question there. If you can speak to the amount percentage that Earth will receive from crypto mining.
Yeah, so I would say the power purchase agreement would be best described as, call it 2/3 paid in a base level cash scenario, and the other third paid in cash, but proportionate to Bitcoin earnings from that equipment. We didn't want to get into a situation where we were getting paid in Bitcoin and we had any of that, so but we wanted to be able to provide a little bit of exposure so that we had alignment of interests, so that their uptime is our uptime. And so it made sense for us to tie a component, a non-majority share of the revenue to their production, so that we would make sure there was alignment of interest between the folks on site and the folks in the control room for the power generation, to make sure we had that working as well as it could.
And right back to your growth plans, follow-up question, what about Ontario and Quebec? You've mentioned previously something about Ontario.
Yeah, we have a high interest in moving into Ontario. We have yet to identify the right site and the right partner for that. And the reason we want to go there is the demand for our products, the interest from the market is high there. But we have to weigh that against the inertia of moving towards California. Strategically, the sooner we can get down and fill the market between us and California, the better. Higher value, there's almost an arbitrage of fertilizer into California because of environmental regulations in the state and what that means for importing and the rest. So if we can get down there, we think the opportunity is massive. But at the same time, we're getting pulled by from Ontario, and I mean, I was born and bred in Ontario, so I have a certain affinity for it, but at the same time, we're not going to let it distract us from the biggest prize we've got in front of us. But it won't be long. Won't be long.
Yeah, thanks, Keith. And questions are continuing to pour in, so if you want to take a drink of water, go ahead. How does Earth compare to U.S. counterparts such as Pivot Biotechnology?
The closest competitor that I can think of in the U.S. wouldn't be Pivot. I'd use Sustain as the benchmark that I look at in terms of I admire the work that they've done, and I like what I see there. It's the regenerative and organic space is so fractured that our view is to make this space scale, you need to have geography, you need to have products that work across those geographies, and you need to consolidate the products down to so there's some consistency. So the alternative is that products are available in each region and everybody has their own magic formula and there's no standardization, and therefore the business doesn't really scale. And for us, we're looking to standardize all that within our granule. So we are nominally right now a PKS solution provider in the soil health space, focused on the microbial and the soil organic carbon regeneration in the soils. So we're going to stay focused there, and some of the other folks that are coming out with novel maybe ingredients, look at how we might include those within ours so that we can build within our product families.
And on that note, how does your strategy compare to some of the larger players worldwide?
Yeah, the gold rush is towards regenerative agriculture. And the hard part with that is no one's defined what regenerative agriculture is in a way that everybody agrees. And so where there is general agreement is that regenerative agriculture is about rebuilding soils and making the soils more resilient and more productive without the needs for more lotions and potions. And so our business model comes from that experience in that, and our products are fundamentally focused on that. We see us and our larger competitors, the large multinationals, have built infrastructure around other products, pure commodity products, industrially prepared, those kind of things. And that worked when we were industrializing farming. and they're pivoting now, and we've got to be flexible and collaborative with them because they are they're big players and they have the ability to really accelerate our business and to potentially be a takeout partner down the road, because they're going to want to service their customers' needs, and as we help our customers fit that, we've got to be able to then provide the scale that they're used to from the Nutriens and the Mosaics of the world, Simplots. But we're going to do that through collaboration. We're not looking at this as purely disruptive where we're going to push those guys out of business. That's not true. Or not relevant to us. We're looking at how can we collaborate with them to leverage what they've got in terms of scale and customer reach with products that meet those customer needs, and we can find our niche in there.
And we have a question here from, again, two different attendees, but same one pretty much. When do you expect to begin selling EarthRenew fertilizer to farmers?
With the recent rebranding and a Replenish, I hate to say we may never sell EarthRenew product under that name. It'll likely find its way into the family of products that Replenish had built, and the branding will all be redone prior to that coming to market. Having said that, we do have some POs that we're looking to fill here in the next little bit to provide that product in the market, and from the product that we have in inventory. And then we're looking at other versions of that product that have similar, maybe not from the same manure source, but that have also a lot of the same properties that would help us get that product in the market. So the EarthRenew product itself, there'll be some product trickling in over the next year, and then ideally we clear up the issues and get Strathmore back up and running next year.
All right, thank you, Keith. 1 second, please. We have a couple of questions on the Colorado facility. So how much will the Colorado facility cost, and how much of the cost will be compromised of debt, and how much will be compromised of equity?
So with Colorado, there's two things in favor of Colorado right now. One is that it's in the US, and the availability of debt for those types of projects is higher. The other advantage is that it's going to be second and a twin of the facility in Saskatchewan. And so the technology risk and project implementation risk, all those risks that make those non-dilutive folks struggle with providing will be gone. Plus the cash flow will be there to support it. So, we're tipping over here from a historically, no EBITDA to positive EBITDA in the next little bit, and that's going to unlock that. So I can't say for certain what the split will be. Our goal is to get to that 70+% debt component. As I mentioned before, if it's 100,000 ton a year facility, the right number, rule of thumb in Canadian dollars, is about $150 per nameplate ton. So in US dollars, that works out to $120 US per ton to build. So if it's a 100,000 ton project, puts you in that sort of 10 to 15 million US range for that project. Some of the CapEx goes up and down pending what power markets can do, because there's an opportunity to add a little bit of CapEx and really extend the amount of power we produce, or to be more conservative and therefore, not produce more power than maybe we can use on site.
Thanks, Keith. If suddenly there was a great demand for your product, Canada, US, across the board, would you be able to satisfy all that demand?
That is the problem we have right now. We are sold out for spring, and we're looking with the customers that we have now. Our anticipation is that we're sold out for fall. And we're not taking a lot of new positions in the market because we want to make sure we can satisfy our current customer base. Two things we're doing to solve that. One, we're looking at third parties to be able to do some granulation for us. So we would do the blending and maintain that IP and then have them granulate it for us. And there's a bit of work to be done there. And having third parties granulate is not necessarily cost effective, but it may allow us to build that customer base. might erode margin in the short term. The other thing we're doing is working with producers who are able to take product ungranulated. We can mix a lot more than we can granulate right now, just given the equipment we have. Then the third thing we're doing is we're actually expanding the bicycle facility, ordered some equipment already, and we should have those upgrades, and that'll provide a bit more capacity. But really, it's going to take the Saskatchewan or Denver projects to get us to the point where we're really moving the needle on volume by a an order of magnitude volume.
Same person is also asking, from how big a distance could you be delivering organic manure to your facility, manufacturing facility, again across Canada, US, or inside your own province?
Yeah, given that the manures and the feedstocks are nominally 50+% water, that makes it hard to ship them anywhere cost effectively. So, in Strathmore, we're located in the middle of a feedlot, which is a little, it's just interesting as to why there's a concern about odor when, frankly, we're surrounded by the piles of manure that are sitting there stagnant as it is. So we've got that. Ideally, we're going to use why we're sited in Colorado where we are is there's a feedlot right there, and one of our other feedstock partners is, I'll say 15 minutes away, but it's probably less than that. And so on the biochar side, with biochar now, so we're interested in finding those efficiencies. Once those projects are together and the value of those products is high, then it becomes possible to distribute them over larger distances.
Thanks. We're about wrapped up here with the Q&A session. So if anybody has any additional questions they want to submit, please go ahead and do so, and I will ask. So I will ask this last question again, unless someone is plans on submitting something. I will let Keith know. The electricity you produce, they want to be clear, is it wind, sun, water, turbine, and how much could the output be increased?
Sure. So we have a natural gas. It's a Rolls-Royce Allison system, natural gas turbine, and that allows us to produce heat. And what we first do is we produce the electricity, and then we take the waste heat, that gas that would otherwise go up to the atmosphere, that CO2, and we do two things with it. One, we put it through the dryer, and the other is we're going to be using that for our CCM to be able to use the CO2 for one of its benefits, which is it can help, if you use it the right way, you can use it to help adhere more nitrogen into the product. So we're going to use our CO2 GHG stream in a couple of different ways to add value, but our power is natural gas, driven by natural gas. So what makes us so attractive to the power markets is we can respond really quickly as a peaking plant, and that has some value to us as well.
I have a couple of more questions. Given the need and interest in soil and health and ESG investing, how do you see the company being perceived by the market, and are there any plans for uplist down the line?
So there is interest. We've heard the interest in moving to a NASDAQ listing, and there's a bit of work we need to do to get ready for that. Getting through this transaction with Replenish was a big part of that, and an uplisting would take a bit of time. There's just some procedural points that we would need to move through to get there. So we look forward to seeing if that's going to be the way we go in the long run. And the other part of the question was around ESG. I mean, we are fundamentally aligned with ESG. We're doing big E in terms of the nutrients and the carbon and the sequestration that we're involved in. We're upcycling our CO2. We're upcycling a bunch of waste products. And so we've got to get that message out. And I think, because we deal with manure, people can put some people off as it must smell, it must be this, that, and the other thing. And frankly, it doesn't. The products don't smell in their treated forms, and to any great degree. And so you've got the E side there. The social is really how we are working within the communities that we're trying to work with, and we're going to keep pushing on that, but it's a tough one, and the governance we've always had. So as an ESG play, I think we're well positioned, particularly for those that are focused on things like climate change, food security, regenerative agriculture, social and environmental justice. Those things are key, embedded, just natural fallouts from the business that we're in.
Keith, if you have a couple of more minutes, we're receiving a few more questions. I just want to address them as well. Is CO2 captured during the process or kind of a catalyst?
So it's an excellent question. It is, CO2 is used in its supercritical form. Sorry to get too technical, in the CCM upgrading process. So we do use it as a catalyst, and we also use it in the drying of our fertilizer. So we use that stream twice. It doesn't capture all of the CO2. We're not carbon neutral per se from that power. But by the time you include what we do with that CO2, our fertilizer facility is actually carbon negative. So the fertilizer we produce has actually got a much lower footprint, than conventional fertilizers, because of the way we manage the GHG footprint of our heating and our production process.
So this question here, it's a couple of questions, but I'm going to try to combine them as we wrap up here. Many farmers use their own manure to fertilize their soils. So how much of that is really left? Could there be a limit to the organic manure availability? And how much could Earth grow? Or do you forecast Earth to grow year over year?
Okay, so there's some great parts to that question. So I'm going to hit a couple of them quick, and then I'll get to the larger. So yes, our facilities are only really going to work for large scale folks that got, the current facility is 25,000 head. The facility in Colorado is 50,000 head. When we were looking at down south was larger than that, or is larger than that, I should say. So that's where we're going to fit. The folks that have, a couple hundred cows, well, a meaningful operation, they're not going to be centralized enough to provide enough manure to make that go. The other point is we take conventional manure, so manure from conventionally raised cows, and turn it into organic fertilizer through our process. So we qualify for organic even though the cows don't have to be. So we're looking at all cows, not just those being raised for organic meat. So that broadens the market for us. And so, we believe we'll need to service, given all the other sources of available carbon. Manure is one, there's biosolids, there's other industrial byproducts that we can use, that we're not really beholden to manure. Manure just happens to be great because it's got its own set of problems. It's available in very concentrated amounts at feedlots, and there's a shared interest in stewardship. Almost all I can't think of an exception, but all the feedlot guys that I know, I've met, also own crop and grazing land, so they get the full picture. So they're a great partner for us because they understand why upcycling their manure into more dense nutrients is cost effective for them, it has higher agronomic value for them, and it's just a better product for them to have on their soil, and doesn't have the same risks from E. coli and et cetera that can be pervasive in using raw manures. So there's there. It also doesn't hurt that there's regulatory pressure against applying raw manures because of, runoff issues and food quality and safety concerns.
All right, that wraps everything up. Thanks, Keith, and thanks everyone for joining today's webinar. Today's webinar recording will soon be made available on EarthRenew's website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at erth@rbmilestone.com. Again, that's earth@rbmilestone.com. Thanks again. You are now free to disconnect.
Thanks, everybody.